I'm not a big fan of that. Right? So just euro and pound crosses. I'm done right up till here. That's it. GF. All these other pairs they don't even look at. All right. Okay. Uh, you know what? Let me finish the presentation and then we can go over Q&A. All right. Okay. The topic today is called AR. AR means Asian range, right? Steve talked about it, and I'm sure if you listen to the lectures, let me just shrink this up a little bit. It'll give me a little bit of room to draw. Here's my Asian box. Okay. Okay, let me choose the color of my pen. Now let's go blue. Okay. So as you know, Steve draws this box. Everybody knows this move, right? Asian consolidation. All right. Sometimes they'll go slightly below, sometimes slightly, because what are they doing? They're widening the spread. So right, and they're inducing and trapping and they're collecting circular trading. Steve calls it, right? All right. Now, so if the market makers create the anchor up here and then they come down and they consolidate, okay, so they've created the anchor, intraday anchor, that is, right? So today, for example, so they came out of the Asian box, right? They came in, they created this, and then they consolidated here. And what they do is they will come below the Asian box and they will use the bottom of the Asian box as resistance. Let me redraw this. No, I didn't draw it nice. I didn't draw it correctly. Okay, let's try this again. Asian box. They come out, they hit the stop, they create the intraday anchor, they break below the Asian box, and they use the bottom of the Asian box as resistance. Okay, this breakout is to induce breakout traders to go short. Then they're going to come back and they're going to stop them out. Some people will put their stops in here when this moved far enough. We've covered last week with the AR50 where they come to the 50% of the Asian box. They'll come right to the middle, they'll hit it, and then they'll drop from there. Why? Breakout traders, they won't pull very far from here. They'll come, kind of half the distance. They'll pull back and stop those guys out in the middle of the Asian box, because there is a strategy where the stop is put in the middle of the Asian box. Okay, so today we've already done this last week, so this week we're going to cover the next move of the market makers. Okay, so here's the classic, whatever this structure is up here, right? Then they hit the stop, then they drop. They induce breakout traders right here. You see how they induce the breakout trader? They come back 50% of the Asian box, they hit it. So the breakout traders are going to go short here. You're like, well, there's a blueberry there. Why would they take the trade there? Not everybody has the blueberry on their charts. Okay, so they're going to go short. They're going to be up 8 9 pips. They're happy. Then it comes back in. Then they're like, you know what, I'm going to take it again when it rolls over. Okay, they take it again. Now their stop is right here. It comes back. Notice some people put the stop right here and some people slightly above it. Boom, it doesn't matter. They're going to knock you out. Okay, they're going to knock you out. Then they roll over. Okay, when they roll over, you're waiting for the RSI line to be below the signal line, below the market baseline. Why market baseline? Because the 13 is above the water. If the 13 goes above the water, you got to wait for RSI to be below the market baseline. If the 13 is below the water, RSI below signal line, below the static, right? So in this example, here's just my stop is going right there, not all the way up here. Why? Because if it comes railroad tracks, I want to get out of that trade. I don't want them to stop me out. Okay, because I'm managing risk, capital preservation, number one rule. That's going to be my move, right? So if I got a 10 pip stop, and if I got more than 10 pips here, I'm going to take that trade. Okay, what's the worst case scenario? They trap. Now once they trap, I'm like, okay, cool, I'm going to move my stop to break even. Why? They come back and take me out, I didn't lose anything, I don't care. All right, capital preservation. All right, and then it continues to the downside. Okay, this is an AR50 move, Asian range 50. That's why Asian range, they come back to the Asian range 50%, AR50. Okay, today we're going to cover the AR00, where the bottom of the Asian range, bottom and the top, they're both called 00s, right? Why? I don't know, I just call it 00. That's because this is a 50, this is a 00. Because if I call it 100, and if I'm going long, then which one is the 100? I guess this could be 0, 50, 100. So if it goes from the bottom, because it just gets more confusing. So just both top and bottom are called 00. The 50 is called the 50. That's it. So here's my inducement. They hit it, and then you go short. All right. So they got to induce out of the Asian range. So now the question is this an AR trade? And the answer, it is. It is an AR trade. I only did this to fool you. This is the first AR move. So your first entry is over here going short, right? Then you're like, well, I got out here. You don't have to. If the RSI signal line don't crisscross, you can stay in the trade. And if price stays below the 13, you can stay in the trade too. So when I get in this trade, RSI is below signal line, I will not get out here. And even though if this one crisscrosses and if price stays below 13, I won't get out either. All right. So there's two ways for trade management. That's how you can manage the trade and stay in these trades. All right. Same thing here. All right. Boom, 12, 13 pips, depending on what you want to do. Now, if this one closes above and this one is pointing up, you got to kill that trade, because you don't know, with the blue tracer down here, you don't know they're going to create the W and then go to the male. You don't know that. So in order to minimize your negative position, remember, like Steve always told me way back when, and Doug would remember too, if you manage your downside, your upside will take care of itself. So if you control your losses, your winnings will take care of everything else. Okay. All right, here's another one. See how they induce breakout traders. They hit the stop there too. First time to the blue tracer, they come down. This is a classic move. Now, to qualify, the distance from here to here has to be 1.5. So if this does not qualify 1.5, and if the RSI signal line does not pinch, this is not considered a valid trade. This was put there on purpose to show you a classic example where everything looks perfect, but it doesn't qualify. Okay, so you simply pass on the move. Did you miss? Did you miss it? Did you miss it? Yeah.
You're gonna have to back up like a minute because yeah, you completely went out.
Oh, I went out. Sorry about that. So we're still talking about the same example, Doug.
Yeah. Just back up
Okay,
on this one when
I'll
you
start
started
on
talking
this one.
about it, like right
Yeah.
when you started diving into it. All right.
All right. So here, notice how they induce out of the Asian box, right? They hit the stop right there on the blue tracer. They came right back in. Here's a classic example of where it looks perfect, and then AR00. Okay, but TDI does not qualify, right? The distance from the static to the bottom of the RSI got to be 1.5. This is 2.6, so this does not qualify for the trade. So this is a pass. Did you make some pips? Yes, you did. But even though it ran, that's not your set. Okay. Right, here's another one. See how they induce? They came back, they hit the 50. This is called a AR50, right? In an AR safety, I should give you a second leg move. Perfect. They trap the static, the whole enchilada is perfect, right? Long. 20 pips. You see how they induce above this move here? The induced people, they came back, they hit the top and the blue tracer. Top of the Asian box and the blue tracer. It qualifies. You see how it came and tapped the static. RSI signal line pinched. Boom, that's your next move, 15 pips. Your stop goes below the shift candle, always 3 pips below the shift candle, right? So if you got a 7 or 8 pip stop and you went for 10 pips or 12 pips, you got more than 1-to-1 risk reward, right? Again, notice this pair, ADR is only 57 pips. Okay, so if you went 1-to-1 and you went 2% here, you made 2%. Why would you not be happy? Okay, here's gold. See how they induce, right? Of course, they hit the stop to the blue tracer. That's why your targets have to be blue tracers, right? They come in, they give you the first leg. They go down, 18 pips, stop goes to break even at 17. All right, comes back, takes you out of break even, no big deal. It rolled over. This is considered an AR safety. Okay, AR safety. You wait for them to roll, and then you show it. Boom, like that. Sometimes they will give you a second leg, and that's what we're going to cover next week. AR safeties. Okay, we're not going to cover much of AR safeties today. We just want to talk about AR 00s. Now, here's an example of something that is not valid. You're like, well, it came within 1.5. Let's presume that's 1.5, right? So it comes within 1.5 here, from here to here, right? You're like, okay, it's 1.5, and perfect. I should short it. It got to touch the water. Just going to the bottom of the Asian range is not enough. Okay, it got to come in. It got to bounce off the water. It got to roll. It got to shift, and then you short. So if this touched the water, and if this was within 1.5, perfect. It's classic. Okay. FJ, induce, they come in, they throw a star formation, right? You see how it comes? It touched the water. It didn't touch the 50, it touched the top. Yes, there's the Mayo and everything there. Perfect. Prices above it. All right. TDI confirms price closed above the 13 long. All right. AR00. They do it quite often. Of course, don't take it in the afternoon. I mean, that's just not going to work. There's no volume. Okay. AJ, same thing. They induce, breakout traders, they come back. 00 line, they hit it. Price got to close below. This one didn't close below 13. Price got to close below 13. RSI line below, signal line below the static. That's part of the rule. Okay, this happens to be an ID also. So this then ARID combo, short. Boom. Okay. And finally CAD yen, CAD Swiss, sorry. Same thing. See? They come, they give you the visible stop hunt move, they come down, they bounce, come down, induce breakout traders, they bounce, they shift, static trap, RSI below the signal line, below the static. That's the rule. On the second leg, it's got to be below the market baseline. First, but we are doing the first leg, so that's my move, down short. All right, gotta know these setups, man. Okay, gotta know these setups. See over here, you're like, well, what about this one, AR50? Yes, it's an AR50. That's why I said the distance from here to here has got to be 1.5. This is 3.16. It does not qualify, so you don't take that trade short. Okay, visible stop on first leg, second leg, out of the band, in the band, breaks below. You got to wait for what? RSI to be below the market baseline. I don't like this candle. It's a pin bar. Pass. Okay, so M, second leg half a bat, RSI out below the market baseline. You're shorting from here. Okay, it's all good stuff, man. It's all good stuff. A lot of material. It's a lot of material. It's we break it down in such a way that it makes it very I would say simple. Okay, but it is not easy. Okay, it's not easy because you have to, it takes time for you to be able to see it on the hard right edge, and there is no better tool in the market than the WSM viewer and the homework helper, which a lot of students over here use to be able to see candle by candle as it moves on the hard right edge. All right, everything is screen captured, candle by candle, all the way down to the 1 minute candle. So candle 1 minute candle will close, and then you will see what happens in the chart. Or 15-minute candle will close, and you will see and make a decision what happens in the chart. Then you can make flashcards out of it. It's amazing. Andrew and Jim and Doug, they did a phenomenal job with both these beautiful tools. Highly recommend it. If you really, really want to learn how to trade on the hard right edge, there is no better tool than that. You got to know the material, you got to have the tool, you have to apply the material to the tool to be able to see it on the hard right edge. Okay? All right. Let's see. Doug, you have any questions for me, bud? I think Kamar is asking
There
about
are
homework
quite
helper.
a few.
Okay.
Let me scroll back up to the top. I actually marked them.
Okay.
I marked all the ones. I only just recently learned that you could actually, flag comments for questions later. Okay, let's start at the top.
Okay.
What is your confirmation for each setup?
Okay. So, oh my God, confirmation is always the TDI. All right. So, the TDI, just think of it very simply. If I'm taking a continuation trades, right? Continuation means I'm allowed to take the trade on one leg. All right. One leg. Okay. So if I'm taking on the one leg, I got to make sure that RSI is below signal line, below the static confirmation. If I'm taking on the second leg, doesn't matter if it's an M or a W or an ID safety or an AR safety or a regular safety or any of those setups, any second leg structure, my confirmation is RSI line below the market baseline. Excuse me.
Okay. This was back when you were initially looking at the hourly chart. Do you only consider the pattern on H1 or 15-minute as well? And I'm sure you've now demonstrated that, yes,
Okay, so
15-minute, but I figured I'd let you
99%
tackle
of the
this.
time, I'm looking at the 1 hour chart. Why is that? Because I've trained my mind and I've trained enough to know if I'm looking at the 1 hour chart, I know what's going on the 15-minute chart, and I know where I'm at on the 4 hour chart by looking at the 1 hour chart. So the 1 hour is in between the 15 and the 4 hour. So if I'm looking at this trend run, I know exactly what's happening on the 4 hour chart. I'm in the correct side of the trend on the 4 hour, and then just looking at this 1 hour, I know what's happening on the 15-minute chart without actually looking at the 15-minute chart. Okay, so for example, right here, I know for a fact this is an AR move. Okay, right here, just looking at that chart, right? So if I click to the 15-minute chart, they induce breakout traders, they come in, they hit it, my entry is right there going short. Boom, 20 pips. Right, just looking at the chart. I've been doing this long enough where I look at the 1 hour chart, I know what's going on the 15-minute chart. Okay.
Yeah, absolutely. I always refer to that as transposition. Like, within music, like if you transpose, you can transpose one song from one key to another. So you're
Right.
you're moving it over a certain degree,
Right.
and it's the same way we do with the moving averages, right?
Right.
Divide by 4, multiply by 4. So
Yep.
yeah, you get to that point. Okay. I believe it was the ECAD, right? A couple questions came up when you were looking at the ECAD, not specifically about the ECAD, but we're getting into levels now. So people noticed that it went straight from level 1 to level 3, and a couple people, were kind of like blown away. What? So, one of the questions. So sometimes level 2 is skipped if it reverses early, and then somebody asked, why, in all caps, why does level 1 go into 3 and not 2 on the Eurocad?
Right.
So
Very good
why don't
question.
you
Right.
talk about that?
Very good question. So look at, I'm also using ADRs, right? So if I'm looking at the distance from here to here, I got about, let's say 280. Okay. See that bottom right there, that number, the blue tracer? It's 280, right? 3 times the ADRs, 283. Of course, I can adjust this. I can go level 1 here, 1350 cross, 50-50 bounce short every day and twice on Sunday, right? My next move is in level 2, which is what? M then W's off the Mayo. So I could have done that. I mean, if I measure from here to here, it's approximately 127 pips, more than 1 ADR. Then I measure from here to here, it's approximately 100 pips, which is 1 ADR. So I could have done that, but I'm also using the 1350 cross and the 5200 cross. 5200 cross is usually level 2, but instead of marking this level 2, I measured from peak to peak, and I realized I'm 3 times ADR, so I went from 1 to 3. But you are correct, I could have done this, right? So if I actually took one of these boxes and I moved it over here to not confuse you guys, that would be my level 2. All right, so if I measure from here to down here,
Oh,
I'm approximately 170, which is not one almost 200. So but that's close enough. That's fine. You're not wrong.
okay. Side question though.
Yeah.
Does it ever go from level 1 to level 3?
Yes.
Purely where you can't even imagine another box.
Yes, absolutely. You can go from level 1 to level 3 when they use big news. Sometimes I don't know if you've seen it, where they have this big news drop, right? They'll fire that news, then it'll go from level 1 to level 3. And a couple of weeks ago they did it, where they went from level 1 to level 3. It wasn't the pound pairs. It went from 1 to 3. I can't remember which pair it was, but it literally just jumped. Boom.
Of course it was.
Yeah.
Thank you, Brexit.
Yeah, it just goes big news, boom, it'll drop 3 times ADR. It'll go from level 3 to level 3, right? I mean, again, what are you expecting
Right.
from level 3 to level 3? I'm looking for a reversal back into the range, consolidate, and then I look at the 4-hour chart to see if there's a potential reset in that area. If there's a reset, then I'm like, okay, it's going to reset and then it's going to drop again. Go ahead, man. Questions?
Okay. Yes, and I apologize. I just coughed. I thought I muted, but it didn't mute. That was my bad. Okay, so how valid are the levels on the 4-hour in terms of turning spot trade to a swing trade?
You want to answer that, or do you want me to answer that? I guess he's coughing. Okay.
I'm sorry. I once again hit the button that is supposed to unmute and mute, and it just didn't work. I will let you answer that because I have gotten away from levels personally, and I've never done levels on the 4-hour, so that's all you, my friend.
Okay. All right. So here's the very good point, right? Classic move right here. M of the blueberry, close below 13. There's the harmonic sitting up here, right? So the harmonic extends all the way up here. Close below 13, back above. They stutter and then they close below the thing. The problem with this trade is what? There's all these EMAs in here, but does it work? The answer is absolutely it does work, right? It drops all the way down here before it closed above the 13. 200 pips, right? So if you're trading the 4-hour, right? You trade the 4-hour. You're trading the reversal pattern. That's why the pattern. Where have you heard that before, right? 1350 cross, 5200 cross. Okay, 5200 cross. This is a 4-hour chart, so this cannot be a safety, right? But it's nice. Close below 13, back above, back below. It'll drop another 50 pips. Okay, 5200 cross, half a back. Close below 13, back above, back below. This is what I'm expecting. So here's my reset. So if you grabbed this and you just literally held it, see, that's why the 13 is so important. All right. Now if you had 600 pips and you didn't close your position, I don't even know what to tell you. Okay, but if you took partials at quarter points, once it hits there, boom, you took some, and you moved your stop to break even, and when it closed above the 13, you killed it. You still walked away with a nice amount of pips. So the question is, can you trade the swing? The answer is absolutely. You're doing this. It looks exactly like a 15-minute move when you take a M of the Mayo, right? That was M of the blueberry. Remember, right here, M of the blueberry, right? Sorry, I'm switching charts fast. Here's M of the blueberry, right? This Mayo is what? The blueberry on the 1-hour chart. So here, isn't that a M of the blueberry? The same move. M of the blueberry, 1350 cross, first pullback, 50-50 bounce, boom, you're at another 135 pips. Same move. I know anchor, I know the ID, I mean the bounce rate is coming next, right? And it's fractal. I just took the anchor and I took the bounce rate. Then I turned around and I used this bounce rate because I know this is the M of the blueberry on the 1 hour chart. That becomes my anchor, right? Brilliant. The band in the band, and here's my bounce rate. Okay, same deal on the 1 hour chart. This is 2. If it's more than 2, pass. This is closer. That's less than 2. That's your move. So if this one doesn't qualify because it's too far, 1 hour chart, it's got to be 2. The distance from there to there is 2. So in this case, it looks like 2.17, but it depends on where you put it, right? Sometimes it looks like 1.952, so it depends, right? But it doesn't matter. That's your move. But this one looks more closer than the other one. 250 pips. So can you make it a swing? The answer is absolutely. You can make it a swing. You just have to know how to manage your trade, all right? And we show you that. Well, I talk about it all the time. So that's just my rule set. That's how I trade it.
Awesome. Okay, so now in regard to the 13, you said close the trade when it moves back above or below the 13 EMA. What time frame, 15 or H1?
It depends on when I take my trade. So for example, if here's my 4 hour chart, I exit when price closes above the 13 on the 4 hour. If I'm taking on the 1 hour chart, my execution is on the 1 hour chart. I got to manage the trade on the 1 hour chart. Close above the 13 on the 1 hour chart, I'm out. Whichever time frame I'm managing the trade on, whichever time frame I'm executing the trade on.
Cool. Yeah, we got a bunch of people asking about what's up with the harmonic indicator. Can you please share that? Can you please share TDI? What do you say to that? I talked about this last night. We obviously can't. Those are proprietary. Those are for members only. It's not part of the open house distribution.
Absolutely.
But I figured maybe you'd like to chime in as well.
Yeah, no, absolutely. I mean, listen, everybody wants to trade and wants to make money, right? The key piece of all of that that's really, really missing is education. And you got to get the right education, man. You have to know. And it's an investment in yourself, right? So you got to invest in yourself. I mean, it's a tool that Steve gave us, and it's a tool that you will get once you're part of the family. I mean, that's what what that is. It's just to be fair to those people who are in the group, right?
Absolutely. What pairs do you recommend for BTMN, like for trading the method?
Euro and pound crosses, man. That's it. Don't look at all the other pairs. They're too slow, and unless you're trading 1 to 1, you can trade this like Aussie and Aussie yen and stuff like that, lower ADR pair, but you got to go 1 to 1 risk reward. That's it. Because they turn back and they're going to stop you at break even more often than you can count. All right. So what are you doing? You're just giving commission and fees to the brokers. That's all you're doing. You're not really making any money because they'll turn around and take that money right back. So you got to go 1 to 1. So if you have I know it's kind of funny, right? If you have 8 or 10 pips stop, you're going for 10 pips. I mean, that's almost scalping, but that's how you would have to trade it. Again, if you're trading percentage of account, it really won't matter because if you're going 2% and in 10 pips you're making 2%, who cares?
Yeah, absolutely. Now, as a beginner, Steve always said, look, you're starting off, you're learning the method, pick 4 pairs. What would be the 4 pairs that you would tell people to trade?
Okay, great.
Starting.
So I would go EU EJ and then GU and GJ. That's it. That's what I would go. And you're trading a major and you're trading 2 majors and 2 crosses. I wouldn't recommend like
All right, cool.
CADs
That's
because CADs would be it's an opposite, right? So it kind of works a little bit funky, and GA and GN or EA and EN, the spreads are too big in most cases, right? And GF is also opposite,
mm,
right? So Your best bet is GU and GJ and EU and EJ.
All right, cool. Let's see. What was the where was the percent script? That's also a BTMM thing. So we can pass that. Oh, on the ID move, must the pullback always be 25 pips to the water?
On an ID move, the pullback has to be 25 to 50 pips back to the water. That's an ideal situation. Lower ADR pairs will not pull back 25 to 50 pips. Some of them will pull back 20 pips. All right, because if an ADR is only 60 pips, right? Think about it. If an ADR is only 60 pips, right, and there's 3 pushes within that 60 pips, each push is only 20 pips, right? If they move 20 pips, they're not going to pull back 20 pips. If they pull back 20 pips, it becomes an M, right? M structure. So it's going to pull back a lot less, maybe 50% of that pullback. Sometimes 61.8 fib. That's where the pullback comes in. So for those people who are trading using fibs and stuff like that, right? Your best bet is the pullback is going to happen after the structure. So if here's my structure, you start from the second leg, right? And then you see the pullback coming back to 50% of the pullback, and then it drops from here. Not to put a pending there, but I'm just saying, if you're calculating that using the pullback, then the pullback does not necessarily have to be 25 pips. It can be a little bit less based on your ADR.
Okay, cool. Now I actually want to backtrack. I answered one of the questions, but I want you to tackle this as well because it turns out I answered it incorrectly. Okay, so for everybody, somebody asked each level box equals the ADR value? Question mark. And I was spending a lot of time answering questions, and I was also handling some email and people trying to get in. So I actually wasn't watching the screen as much. And I answered that the boxes are actually the consolidation zones. And I talked about how the market is dynamic. So level 1 could be 75%. Level 2 could be 125%, and anywhere in between and beyond, right? So what I didn't notice is, back in the day, Carr was more the pioneer. He was mainly the pioneer of how levels were drawn. And Carr used to strictly draw around the consolidation levels. But now I'm looking at your chart. I'm going, oh, you know what? Now you're drawing boxes that connect and they encompass the entire move. So why don't you talk a little bit more about what you look at on the chart and how you decide to draw the boxes?
Very good question, right? So if you look at this move coming up, right? So this, let's look at from here, GC, right? So for example, from here to here, right, from the bottom to this top here, it's about 390 pips, right? Close enough to 3 times ADR. It's more than 2, less than 3. Let's put it that way, right? So it's let's say 150. So 2 times ADR would be 300. And this is about 390. So it's a little bit more than 2, little less than 3 times ADR, but it's more than 2. So it's in 3, but not 3 times ADR. Okay? So that's why this looks a little scrunched. So if you look at this move from here to here, the straight up move is about 260 pips, almost 300 pips. So this is almost 2 times ADR. But again, for visual purposes, here's my consolidation, here's my consolidation, here's my consolidation. So this box was drawn for visual purposes, right? I could have purely, like before, I could have purely removed that box and done this. Move this out of the way, put this as 2, and leave this as 3, and then you're like, wait, how did it go from 3 to 2 to 3? Because the move from here up here was almost 2 times ADR, right? Again, for visual purposes, I did it the other way around, but this is the correct way to draw it. 5200 cross, W off the male, right? 60 pips, easy. 1350 cross, first pullback, 50-50 bounce, right? Now, of course, this was news candle, so you can't take this trade, right? So if you look, 1350 cross is the easiest thing to see. 1350 cross is level 1. Then when it takes out this high, notice level 3, because it came off 1 ADR. When it goes 1 ADR up, this should line up with 3. The 1 should line up with 3, like that, right?